Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The USDA gave us quite the surprise, and the market has responded in kind. As we can see off the chart, our point of control level coming in at 361.5 is where the market found a bit of support, and that happened to coincide with our time factor, and from here the market really did skyrocket to the upside. We're seeing some follow through on Friday's trading, and the market is now poised to find potential resistance near 380, which is very close to where previous resistance did exist. The move up in the market does come as quite a bit of a surprise. As we can see, the market gave us a bit of recovery, and what we were noticing was a bit of a turnover that was occurring. But instead of continuing to the downside, the market once again did find support near 360, and from there the market has since bounced. D's corn now finds itself up against volatility-based resistance overhead, and we're looking for somewhere near that 380 mark to be potential very good resistance. If the market's able to get beyond volatility-based resistance, we do have 391 overhead as potential resistance, and the true point of control level sitting at 405. We do not want to be presumptuous, so right now we want to see the way the market responds near that 380 level, and beyond 380 the next target objective would be somewhere near 391. Soybean futures also responded with a surprise move. We had seen the market declining for about 2 or 3 days. Then the market reversed and recovered all the gains from Wednesday. We can see here we had our point of control potential support level sitting at 845.5. The market did not quite make it to the 845.5 number before turning back up. But the reversal that we're seeing in soybean is not quite as demonstrative as the reversal that we did see for the corn market. The market did not exceed previous highs, and we do have our sinusoidal resistance level sitting overhead in conjunction with volatility-based resistance. It's going to be very important for this soybean contract to get beyond previous highs if it's able to tick a little bit higher. Even still, that 880 mark is still potential for this contract, and if it's able to get through that 880 number, the next area of resistance that we'd be looking for is somewhere close to $9. Ideally for soybean, we had looked at this consolidation phase as a potential area for the market to turn around and give us another move to the upside, but then it broke previous lows in the move from Wednesday, only to recover and start to make its way back inside of that range. And so now we're looking at that one-to-one correspondence returning and becoming back in play, again looking at about 880 to 890 as a potential resistance level for this contract. For soybean, it had been doing a fairly good job of tracing along our 1-by-1 angle, with a couple penetrations coming in for the market, with the biggest penetration coming in on Wednesday and Thursday of this week. The market has now recovered back above those levels, and now we're testing back above the 2-by-1 angle. So the key level we would now be looking at is a signal for a potential breakout to the upside, would be getting beyond our point of control level of 873 3/4. And getting beyond there again, we'd look for the market to find resistance just slightly higher and then be able to reassess going forward from those levels. Even the wheat contract was a recipient of the bullish news, with the market also finding very good support against our 1-by-1 angle. The formation that we are now seeing is a higher double bottom. And so the market made a significant low back in September, and then from there we see a double bottom potentially forming. If over the next couple of days the market continues higher and breaks above our point of control level, then we can very well see an advance that goes up to challenge the 540 level for the contract. And so it's going to be very interesting over the next couple of days to see the movement that follows through for December wheat. Again, the key level that we're going to be looking at then is going to be our point of control level of 520. And from there, if the market's able to clear that 520 area and continue to tick up over the next couple of days, that's going to be very important for this contract. Interestingly enough, the double bottom that we are seeing for the wheat contract happened to occur right on top of volatility-based support. And so that is of significance as we look at this market, especially since we saw an SR5 indicator post early in September. So again, our key level is going to be near that point of control number at 520, and above that, we're looking for a potential target upwards of 540. If the market is able to make it up to that area, we do have volatility-based resistance overhead. So that's going to be a very key area for this market if it's able to make its way up. In fact, a breakout above that 520 number with a target of 540 looks potentially probable for this contract here. Again, the next couple of days are going to be key. The move for crude oil has been quite the impressive advance. The market made it up to our 360-degree level of 76.50, and from there the market essentially touched it and has been moving down since. We were potentially looking for the market to even come down and come back up and give us a lower high, and it did give us something akin to that type of movement, with the exception that the pullback that we did see from this market was only a one-day pullback. Then the market collapsed in a very big fashion over the next 2 days that followed. Again, even as we can see in trading on Friday, the market tried to make its way up inside a little bit, only to fail back down, and is currently trading at the bottom end of its trading range, showing that the market has potential for continued weakness. Part of what we would like to see from this movement then, if this market has finally topped and potentially for a significant timeline, we would still continue to look for a higher low to come in, and giving us a higher low would be an even more bullish indication for the market to go down. And if we find support sitting near the $70 mark, with the market coming in near the 74.5 to 74 number, a short that comes back in and perhaps tests or challenges somewhere in the neighborhood of $68 is plausible. So what we want to see is if these areas are able to hold, or if the market just simply falls out from this area here, as we did have a mid-month time factor coming in for the top to come in. The market did reach our topside overhead objective price near the 360-degree mark. It simply did it a lot earlier than we anticipated. The movement over the next couple of days are going to be very key for crude oil as we move into a potential for continued weakness over the coming days. The US dollar continues to give us much of what we've been anticipating. We can see the market gave us a nice signal here for potential topping formation, especially since it gave us a lower high compared to the previous major high that it had. The market came in and we had a long-standing potential support level sitting in at about 95.10, and from there we can see on the trading on Friday the market has bounced just a bit. The market here, as we can see, could potentially give us maybe another small upside day, but it looks like the market wants to return to potential weakness. So the key level that we would be looking for here for the US dollar would be somewhere in the neighborhood of 93 before finding significant support. The weekly chart is once again largely unchanged. As we can see over the last 2 weeks, the market has basically been in a sideways movement, where a week ago it moved up, and then this current week it moved down, and the ranges were pretty much identical. We continue to look for a significant move to either side, but for now it would appear that the leaning for the US dollar would be good resistance in the ranges in which it's been trading, with the potential for a nice move to the downside where we're looking for support near $93. Thank you for joining us for our regular market update. Look forward to touching base with you again next time.